I do want to start with the read-through from Visa, because I do know that you compete with companies like this. So the fact that we did see this increase, this double-digit increase in payment volumes, what are you seeing in terms of the consumer? And is this a situation where they're continuing to gobble up market share, or is it not a zero-sum game?
Well, look, in my opinion, if I look at something like Visa, right, it's in the short term, obviously, still benefiting from two things, I think. Still, we're seeing, on a year-on-year comparison, we're still seeing some effects of people coming back from what used to be COVID restrictions and into more normal circumstances, and that's still giving a good positive push here. People spending more in stores and in kind of physical presence, right, rather than online. So that's obviously part of it. I also think that there's still obviously that underlying digitalization trend that is mentioned. I think, however, one should be very mindful. I mean, the biggest barriers of entry to compete as a network versus Visa and MasterCard has been that the terminals in the stores are super dumb, meaning that rolling out a new network today, the barriers of entry are almost, they're almost impossible, right? But those terminals are getting super smart by Adyen, by Stripe, by other payments providers. Launching a new network in the coming years will be significantly less expensive. And we have to remember we're looking at an industry that charges society $440 billion in cost for basically shifting money between accounts, which isn't that much more difficult than sending emails. And the cost of payments in the US is 10x what it is in Europe due to the lack of proper interchange regulation in the US. So these are, in the longer term, in my opinion, both opportunities for a company like myself, but also very risky outlooks if you are a long-term investor in these companies.
Sebastian, are you needing to pivot away a bit? I'm not saying you're abandoning it, but away from buy now, pay later, toward being more of a trusted payment company and payment gateway with the data you have on customer purchases, and perhaps with retailers, with merchants needing that granular data on how to connect the right buyer with the right item?
Yeah, yes, very much. I mean, it's already almost half of our volume is debit rather than just credit. So we are already, doing a lot of pay now, so to speak. But in addition to that, if I look at the long term, where are financial services heading? In my opinion, one day you wake up in the morning and your digital financial assistant will tell you, hey, I've analyzed your purchase history. I realized I could save you $20 by, say, changing mortgages, changing electricity provider, whatever it might be. The only thing you need to do is to say yes, right? I used to think that's far in the future. Now, as I'm seeing what's happening with opening out ChatGPT, the things we're experimenting, this is coming very close. The future of financial services is not to maximize interest rate spread, which is what the banks have been doing, which basically means pay as little as possible to depositors and charge as high interest rate as possible. Those days are soon gone. And the true purpose of a financial service technology is going to be to help people save time, save money, make them less worried about their finances. And that's all about who is trusted with the data and who is the best at taking the data of the consumer and turning it into very profitable, actionable, and actually taking actions on behalf of consumers to help them in shopping related decisions, in purchases, and all these things.
Yeah.
So it's a exciting future in that area.
Yeah. Yeah, and certainly, I mean, you're raising key points that are very much in focus where the business model, the traditional business model of banks is concerned, too, given all the turmoil we've seen within the sector here in the U.S. in recent weeks. The TikTok-like discovery feed that you are implementing and you are announcing today, you just kind of touched on it, but specifically, why are you doing this? How are you doing this? And what does this mean in terms of future business growth and opportunities?
So it comes back to to the question about Visa and our, the difference with Klarna. So Klarna has 500,000 merchants connected today. And the difference on our network today, as opposed to Visa or MasterCard, is when you make a purchase with Klarna, we, merchants and consumers share with us not only the amount that you're shopping for, so I bought for $50 at Macy's, but the actual full digital receipt, the full SKU level details. What did I buy? What color? What size? What item, etc. And this has allowed us to now utilize that data to provide richer services, to provide recommendations based on your purchase experience, what could be interesting items for you to purchase. And we've seen already in China that what used to be a search-led commerce was 80-90%, recommendation was maybe 10, 20. Today is the opposite. In China, 80% of purchases on the big Tmall's, Alibaba's, etc. is recommendation-based. You're opening the app and you're already getting great offers and suggestions that make sense to you. we have a unique opportunity there to help our retailers grow because of the data consumers have decided to share with us.